Here we go, stocks by the numbers, and let's do a quick update on Fubo. I think we did one like 3 weeks ago or something, so let's just take a look at some of the trend lines, see what we might see here. So this was our support trend line coming up from right after the bull dropped as we began to climb, and then boom, of course, we got that big news coming out of Disney. But you can see that just going up across the bottoms of those candles there, and technically we recently broke below that support, immediately tried to jump back up and reclaim it, and have since dropped down not only back below it, but also below this trend line as well, which you can see appeared to be a key level where the stock was bouncing off of, breaking, trying to reclaim multiple times. And now we technically pulled back slightly below the 20-day moving average. Stock closed 395, down about 2.25%. So the question I'm sure a lot of people have now is, okay, it's sub 4. Should it be back on the radar? Is it going to continue to start dropping, another 20, 30 cents? Should we add here? Or on the flip side, is it going to, just completely give back a lot of the gains now moving forward? And is it going to remain quiet maybe for the next month or two? Should I maybe take profits and then wait to get back in? Well, it really depends. Depends how you look at it. Overall, in my opinion, I am still personally bullish on Fubo. I think that kind of this initial reaction here up to like 6.5, I think that personally, that's kind of where they feel the company is worth now, right? Because again, Fubo on its own merits went up to, I think it was like 385, 387, and hit those new highs on its own merits a while back before this was even spoken about, right? We spoke about it back here, August 23, and then it popped up here again, December of 23. And since then, technically, the company grew, right? So just looking at Fubo, in my opinion, it's at least worth $4 or $5. Now you have Hulu. And that's what made people even more pumped, because I know obviously Hulu is a familiar name that a lot of people know. But now, you're combining the two, and there's, what they say, like 16 million accounts or viewers or whatever it was. So now that's all going to be added essentially into the business, and that's all going to run under the symbol of Fubo, right? So now you're buying, in my eyes, that $4 to $5 company plus Hulu. So that's why conservatively, even if you give it a third of the value, even though I know people are saying it's worth more than what Fubo had. But again, hypothetically, even if you say it's worth a third of what Fubo was worth, you're looking at $5.5, $6 a share. Again, that's being ultra conservative. And that's why I laid out a couple of these other trend lines here. Yeah, we have to really back it up, but you can see it looked like this next key level was this previous spike back in August of 22. And that looked like around $8.14. So because we popped up to this trend line, that's why I think even if we slowly pull back here to like 3.5, meet up with this fib level, 351, meet up with this trend line here, and then we really should bounce and storm back up going into these earnings. Looks like earnings are coming out in about 3 weeks, expecting a loss of 17.7 cents a share off of revenue of 445.82 million. And we've been looking and tracking Fubo's numbers. Again, revenue growing, subscribers growing. So Fubo looked like they were doing well. I said, in my opinion, there was value here. And then boom, we got the news coming out of Disney. And that's why, again, I feel they needed Fubo. Fubo didn't need them. Fubo was on the up and up. And again, they were keeping it down. People may have waited for those legalities to clear up. And then boom, Disney steps in and says, you know what? Let's just take care of business. And I had a feeling that was going to happen. But technically, again, we could potentially pull back now that we're below this support. We could pull back to around this 3.5 level, meet up with that key level, meet up with that fib level, and meet up with that trend line right around there. And then maybe have a bounce right back to like 440, or maybe even break up. You can see to this trend line here, it could get back to the high 480s, maybe 490 even going into earnings. So you kind of have to wait and see. And also, if you draw the shorter term trend lines here, let's do that together. If you come here with this low 305, right? And if you cut up across, right, from these bottoms, you can see we technically broke and dropped down below it. If you want to go from 305 to this bottom, you can see, look, it came up today and technically would have rejected off of that line and came down a couple of cents and closed below it. So technically it's below, short and longer term support trend lines that were drawn out. It now closed below the 20-day moving average. So that's why we could pull back there. But, really not too drastic of a move. I know percentage wise, you're talking whatever, 10, 15%. But realistically, in the long scheme of things, I don't think it's a big issue. And you can see that, look, the stock right here came up to about 3.5 before completely breaking up and out to new highs. And then it pulled back and rejected off the level. But you can see it started to make its way up, stopped basically right around that 3.5. And again, it's not exact. So we could be, 346 to 353, right? Because even if you come here, well, the high on this candle, 359, look, the close, 345. And even if we come over here, that's like 360 showing us. High of 350. High of 355. Closed at 349. High of 350. Opened at 348, right? So, in my opinion, it might want to come back down to that key level. But based on previous performance, in my opinion, if it does start to do that, you're probably, I would say, I have 90% conviction that if we see it sell off and pull back to 3.5, it really should immediately bounce and get back to 4+ going into earnings. That's my opinion. I would say I have 90% conviction on that. Because again, nothing's guaranteed. But in theory, that's what I feel it should do. And breaking back up to these trend lines and hitting new highs. Hopefully it's a decent quarter. I know last quarter was slightly missed on the revenue, even though numbers across the board seem to be pretty decent. And again, I always bring up that one update we did where that article came out where they did the study on the ads and it showed that Fubo was one of the best and people interacted with their ads the most and they watched them the longest. So that's why I also felt that there was going to be longer term value there with Fubo on the ad side of the business. So in my opinion should be fine, but I even like it kind of around here at these levels. If it pulls back to 3.5, I would like it even more. If they happen to post a rough quarter and drop back down to 3, I really don't think it should happen, but hypothetically if it does, I would still like it. I own a handful of shares of Fubo. My cost is like 170 something, I think. So obviously I'm still up big, but in my opinion, it really should continue to grow. So we'll see what happens. Roku again was another one we talked about. Looks like it's been holding that 80 level. There was value there. Yeah, we looked at this. We really didn't have much news. Let me check FinViz real quick. Short float on Fubo right now saying about 10%. This was what, the 31st. It's talking about Sony. What is this? Cineverse expanding content partnership with Fubo. Oh, hold on. Sorry. Let me pull this down here. There you go. This was about a week ago. You know what? I'm leaving that there. I don't want any of your cookies. None of them. Announced an expanded partnership with Fubo. Through this deal, 2 of Cineverse free ad-supported streaming television, FAST channels, Dog Whisperer and with Cesar Millan, and GoPro channel are now available, with So Real coming soon to all of Fubo's English language, alright, whatever, I'll accept for you guys, English language channel plans. Quote, Fubo continues to be an incredible partner for us, and a leading home of a growing lineup of FAST channels that entertain audiences and bring value to advertisers. What I say. It is an ideal platform for our newest channels, which feature popular programming for audiences young and old with built-in fan bases. Following our descriptions. Oh, Bob Ross channel. Nice. Got the Dog Whisperer. Yeah, I don't care. Maybe you guys care about those shows. I don't really watch TV, but Cineverse, Next Generation. So expanding a partnership, always good news, right? Was there anything else? Because I think we looked at it at like the 17th, so I'm just, what was this? DirecTV Slim Bundle. Oh my goodness. Can't even read an article anymore. I don't even care. But anyway, DirecTV launching sports streaming. Nobody was doing it. Now all of a sudden everyone's trying to get into that market, right? Take note of that. That's another reason why I like Fubo. Setting the trend, not following it. Launch 24 markets Tuesday. From Warner Brothers. All right. I mean, you know, it is what it is. DirecTV with their little slim, skinny bundle, which again was something that we spoke about in a previous Fubo update where they came out and they said they were going to start making the customizable bundles. Remember? You are actually literally going to get to pick and choose what you want and pay for it. And I know some people kind of have something like that going on, but I would say it's not fully customizable. So that's why, in my opinion, I viewed that as positive for Fubo as well. But maybe I'm biased. I don't know. RSI, middle of the road here, sitting a touch below 55 on the daily. We spiked up. You can see the tightening taking place. So again, we could potentially drop, as we said, to this about 3.5 level, but we could tighten up, and the Bollinger Bands can continue to come in and tighten. And it may just be preparing to just hang out and then hopefully get ready to pop after earnings. But again, estimates up to 445 million, we said. So we'll see. That's going to be for Q4. This time last year, about 410 million. So yeah, we're looking for 7-8% bump up in revenue year over year, which doesn't sound too crazy, but again, you never know. You never know. MACD crossed to the downside after that big news spiked it up. We've just kind of, again, just kind of been hanging out in our tight little range. You can see 200-day moving average coming down to $7. So, yeah, that would be like here. So that's why, again, if we do happen to have a decent quarter, we can break up and out and start to head back towards like that $6 level, and then maybe like slowly come up like that and see like 7, and then come back down, maybe cool off, and then maybe run up to 8 going into maybe next quarter's earnings. Again, I know I'm being, you know, very optimistic with it because we could drop down, but realistically, again, if you look at the low when that Disney news hit, 305. So in my opinion, even if it is a miss, and now a lot of people sell after it was pumped and they secure profits, they don't want to hang on, you know, 305 might be the low that you see on a potential earnings miss, which in my opinion, I would probably add to the position. But again, we have to wait and see earnings. You never know what they might say. But hopefully we get a decent report. I was going to do something. Pivot points. Check the pivot points real quick. I'll let you go. Oh, there we go. So, okay, down here, 274. Looks like previously was, yeah, about 430, maybe 440. Yeah, which would kind of be reclaiming that trend line, but next one up there at about 560, it looks like. Below 274, I really don't think, I think that would be a big overreaction, but again, you never know what could be reported. We have a pivot point right here at 393. Stock technically closed slightly above that mark at 395. So you have to see now what it wants to do tomorrow. It doesn't want to pop back up to like 4 and close there, or it doesn't want to break to like 391, just below it and close there and kind of just show you that it's going to potentially be bearish down to about that 3.5 level. So key day, well, no, not tomorrow, right? I don't even know what day it is, but Monday, obviously key level for you to watch for Fubo. But that's pretty much it. I still like it long term. Again, looking at the numbers real quick, 1.33 billion. Okay, we're gonna come in 440. Let's say they hit that mark, 445. So we'd be looking at 390, 386, and then 440. Yeah, so that'd be about 1.6, which would technically indicate still good growth year over year in revenue, going from 137 billion to about 1.6 billion and change. Lost 290. We lost 50, 75, and 50. So we're at what, about a loss of 125. But if they bring in 400, they'll either be near flat. Yeah, they'll probably be near flat, maybe lose about 10 million. So you lose what, like 135 million, we'll call it, off of 1.6 would be 1.45 billion about. So 1.45 billion. I'm all over the place sometimes when I do this, sorry. It's because my mind's like thinking and trying to go to multiple different places. So debt has been coming down 380, cash 150. So we're at about minus 230. That obviously isn't good, but again, we got the cash injection from Disney on the news of the deal, right? So that's why people were saying, the debt, the cash burn, the losses, and everything that Fubo, the few negatives that they were afraid of with Fubo are now kind of washed away and taken care of, supposedly, in theory. So again, are we going to immediately see the stock rocket this quarter? We don't know. Over time, in my eyes, I think if you give this like even a year or so, but even conservatively, 6 to 12 months, I think you'll be all right. But that's just my opinion. Liabilities outweighing assets in the short term, inverse on the long term. Equity 222. And what was that again? Yeah, that was like minus 230. So even without taking in, because I think they gave them like 200 million or something to settle the legalities. Don't quote me, but it was something like that. So we're not even taking into account that figure, right? But that would essentially be a wash. And then we said for the year, we were at like plus 145 billion. So you can see that really, in my eyes, is kind of the fair value of the business, like 1.5 billion. Again, fair value. And the market cap right now, 134. So in my opinion, it's undervalued. We're sitting at 395, and we can easily double up from here. That's why I'm saying $8 a share would be 2.7 billion. Fair values around 1.5 billion. So you're still not even trading 2x, quote unquote, my fair value, right? So that would still be conservative, even $8. So that's why I think, again, if you're a trader and you don't like to hold, these earnings might be more heavily weighted for you than myself. In the long scheme of things, this is nothing. And in my opinion, I actually think it's still on sale. But that's pretty much it. But let me know your thoughts down in the comments below. If you do see it start to break like to the 370s, the 360s, are you going to add more? Are you going to potentially view that as kind of a negative signal that markets are going to maybe drop it going into and after earnings? So you'd want to get out at 370, 360, right? Everybody's different, but let me know down below. I'll end it there. Once again, stocks by the numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good weekend.